So are they producing enough Teslas to warrant this earnings per share beat?
Well, yeah, first of all, they lost money. Their adjusted number makes it look like as if they did make money on every share, but in fact they lost money. They lost 40 cents a share. But are they producing enough? They're producing more than enough. It appears the backlog for Tesla cars that was once as high as 15,000, according to the company, is now gone because they made 7,500 cars in the quarter, but they only sold, as I look at my model, 6,800 or so. That was not only less than, as you mentioned in the lead, less than a lot of the analysts had looked for, but indeed, what we saw from Tesla was that they had a decline in sales on a quarter-over-quarter basis. So for the first time ever since they started making the Model S, they sold fewer in the most recent quarter than the previous quarter.
Well, Cory, what are their estimates for future production in the quarter? They said, what, an increase of anywhere from 13 to 15%? They really going to be able to pull that off?
Well, making them and selling them are two different things, right? So they say they're going to be able to make more, but right now it doesn't appear that making them is a problem. It appears that selling them is a problem. They're not able to sell as many as they had before, and so they're starting to see some of the limits that they're in. Now, there's a lot of excitement about potential places where they'll sell them in the future, such as China, talked about quite a bit in the press release that they put out accompanying these earnings. But we'll see what those results are. But fundamentally, it's a Nito car. It's a Nito electric car that happens to cost $120,000, despite all the rebates that exist for the green conscious consumer. It's a car for millionaires, and there are only so many millionaires in the world that want to buy this car. And I think that that's one of the issues they're starting to bump up against. They don't have any new products expected to be on the market this year. Maybe a car for next year, but no notion of what that pricing will be. They're saying spring of 2015 for their next vehicle. And this one is, I don't know if it's long in the tooth style-wise or what, but sales are down, a number of cars, and the stock is down as well.
I was going to say, the stock isn't doing Nito, is it, Cory? It's down about 7% in after-hours trading. How is there such a large discrepancy between the adjusted earnings that they report and the unadjusted earnings?
They put a lot of factors in there, not least of which is stock compensation. They give stock options to employees, and they account for those by reducing or adding costs that reduces their operating profit. That's one of the things they subtract out of that. But there's a lot of machinations that go into this. The thing that I'm trying to figure out, and I've spent not a little bit of time on this, is understanding the difference between their leased vehicles and their sold vehicles. The vehicles they sell to a person, of course, there's no dealer involved, so they recognize all that revenue right up front when they make the sale, and because there's no dealers, their margins are higher than the other car makers. If you take out the dealer expense, you'd probably see, if they've got a higher SG&A cost, sales and general and administrative costs, because they don't have a dealer. They've got their own dealer network. The SG&A costs went through the roof this quarter. They went from about $40 million a year ago to over $100 million in this most recent quarter. I don't know if that's about operating more dealers, more marketing costs, who knows. But the result was a bigger loss for this company, as big a loss as they've had really since the first Model S has started rolling out into the world. And we'll see what this means for them in the future.